Well, good evening. This is Steve Carver, my presentation number 1141, and so glad to have you with me on my journey through entrepreneurship and letting me join you on yours. We've got a interesting presentation ready for you tonight. First thing I'd like to say to you is I am not a lawyer or a CPA or a tax attorney or anything like that. Just an old codger that's been in business now for over 60 years and continues to be in business. Matter of fact, I had one of the busiest days today and most fruitful days today I've had all year. So every now and then a old blind hog will find an ear of corn or a nugget. And so today's one of my great days in business, and I'm still glad to do a lot of business all over the country. First advice I'll offer to you is always get a second and even a third opinion when you're getting ready to make an important decision that's new to you, that affects your security, your business, your family, or your future. And really good places to get good business advice is from your small business centers throughout the state at the community colleges. We are very fortunate to be sponsored tonight by the Small Business Center in Nash County over at Rocky Mount. And that director is Ruthie Holloman, who is a wonderful director who does great work for lots and lots of people. I encourage you to set up an appointment with Ruthie. You can give her a call or her assistant, Shania, at 252-451-8344. They'll be happy to help you any way they can, set up an appointment, share information with you. And the good news is it's all free. And it's all totally confidential. It's all professional. And if they don't know the answers that you're looking for, they have a whole network of folks throughout the state they can rely on to help you. You'll be getting a survey after the night's program. Please take 60 seconds and fill it out and send it on back in. The directors really need this information to help plan future webinars. Your study guides that have been mailed to you if you pre-registered include a outline of tonight's talk, which is titled number 1141. If you don't attend the webinars, and I hope that you will, I suggest you print those outlines out, and they're excellent to make notes on and to keep up with things as we go along in the presentation. You got several other important study guides that come with it as well. We'll talk about them as we go through the session tonight, especially something new that I haven't offered before is questions related to brand new businesses and vendor sale taxes, frequently asked questions that we get a lot, and I've got some good information there for you. You do have a quiz for this fall's presentation in the courses. Filling out that quiz will help you nail down a lot of the points that we've covered, help you remember them. And also the quiz is one of the qualifying documents that you'll need to qualify for membership into the Academy and for other awards besides your course completion awards. So I'd really like to see those filled out and sent back as soon as possible. Earlier, last week, I sent to you the same quiz with the answers. So all you have to do is refer back to those and you'll see exactly the answers that you need to type into the blanks to send to me, as well as your name, the way you want it to appear on the certificates, and also your mailing address. Sarita Sampson, who's with us tonight, will prepare the certificates and then we'll put them in mailing envelopes and send them to your mailing address. So on the quiz there's spaces for you to fill in those blanks, and please do that and just email me a copy back and we'll take it from there. This coming Thursday night with the Sampson Community College presentations, we'll be doing the basic bookkeeping, forecasting, and negotiating, which is the exact same program that we did here last Tuesday night. So if you missed last Tuesday night, please join us on Thursday. You can make up the class that you may have missed. Or if you just want to go deeper into what we were talking about, try to understand it better or ask questions, it's a good opportunity to do a repeat class, and you'll certainly be welcome. Now, the good news is that next Tuesday night, a week from tonight, we'll be starting a brand new, 5-part course This course on Tuesday nights will be sponsored by the Martin Community College, and all of you are welcome to attend, of course, and I hope that you will, because these sessions go deeper into, it's kind of a step-up level from what we've been doing in this course into really important aspects of starting your business. Next Tuesday night is especially interesting. I think I'm the only presenter that's doing these subjects, and I call it red flags for pivotal points. And what I do is try to highlight things that are happening in your business as you're moving along that you really need to have your radar turned up so that you'll recognize that this is an important time for you to make a decision. Lots of times these events will pass you by and you don't even realize that they were there until it's too late to make a change, but I'll help you focus on that. It's a real good mindset builder for every person in business. If you've been in business for one day or 100 years, I found these very interesting as I was putting this together. There's three basic pivotal points for all entrepreneurs, and recognizing them are so important. You've got your turning points, you've got your earning points, and your learning points. And I think you'll love this presentation and rely on it often. So please join us next Tuesday night, same time, same sign-ins, and for some new information and new lessons. And then we'll follow up for 4 more Tuesday nights, and you will be eligible to win certificates or to earn certificates with a 100% attendance during these 5 lessons. Next Thursday night, I'll announce the graduates and the awards that have been offered after I can't finish that up until next Tuesday, this coming week. And I'll announce the winners of all the awards. And this time we've got several people that are really well qualified to be first in class. So I may have more than one first in class this time, because some of you have really gone the extra mile, and I want to give you due credit for that. And we also have other extra mile awards as well as achievement certificates. So next Thursday night we'll be working on that, and I'll make sure everybody gets notice of it. We've had 27 people attending the series so far with the Tuesday and Thursday night sessions. And lots of really continuous and good attendance. I appreciate all of you being with us. We've had, it looks like 5 people that are already at perfect attendance so far, and I appreciate all you guys, Miko, Tasha, Sarah, Trook, and Tamara. Congratulations so far to y'all, and I see some of you are already, so you'll be 100% for 6 weeks. And then Robbie and Alfree, Cindy, and Sarita hadn't missed but 1 class so far in this series this fall, so thank you for your attendance, and y'all, all of y'all will be qualified for some certificates as well. Just recognizing people that have been with us: Jimmy Packer from Garland, Sarita from Clinton, Hope from Murphy, Sarah from Nash County, Trook at Whitaker's. And Trook, I'll mention, has completed every assignment, has done her, rewritten the 40 drill skills, and has done a video. So she's done all she can do so far, and I'm so proud of her, and working hard and really promoting herself on social media as well. Dr. Thomas is doing the same thing. She's really been very active with most of her assignments and videos and other things, so she's working hard, as Miko is. Thank you so much, Miko. She's also completed all assignments, did the video, the 40 drill skills rewrite, did a video, and she's already sent in her quiz, so thank you. Thank you, Jamaica, and I'm glad to have, or Jamaica, I guess. I'm glad to have you back with us tonight, and thank you for all that you've contributed. Tasha, you as well, you're doing a great job, and I'm looking forward to seeing that nonprofit get started up. Keisha has been missing in action for a couple of weeks, but we appreciate her efforts. And Cynthia has tuned in now and really getting heavy duty into her work this past week with the Posh Llama. And I'm looking forward to more information from Cynthia. So thank you so much, Cindy. Robbie, your regular attendance has been appreciated, and thank you for being such a great entrepreneur there in Roseboro, and I look forward to working with you for many years there. David, I got another message from David over in Marshall. I mean, that town was wiped out down Main Street. The videos from over there have just been incredible with the damages to flood did there on the New Broad River there. It's just absolutely amazing. They're just trying to clean up and find their footing now. It's such a mess, and I'm sure we all have friends over there that we're concerned about. I also have a special message about Vanessa McIntosh, one of our long-term members of the Academy. As a matter of fact, she was our first-in-class winner for a couple of years ago. Her house ended up sliding down the hill, getting a big tree through the top. The house is still standing, but it was pretty much totaled inside and out. So Vanessa started a GoFundMe account. I'll send you all another email reminder. Whether it's $1 or just a note of encouragement, anything you can send to Vanessa and her family will certainly be appreciated. And we're always, as the Academy, after mutual helpfulness and trying to help anyone that we can. So let me encourage you to send any contribution or words of encouragement you can to Vanessa. I'd appreciate it. Stay in touch and watch the webpage at Facebook for the Academy. We'll be adding more information as we announce our award winners next week. So moving into the presentation now, a little bit of chat work. Get those happy fingers ready if you don't mind. And someone asked, how do we register for upcoming classes? I'll send you through email the links that you'll need to register for the classes. So thanks for asking that, Roland, and I'll be happy to do that. Okay, you got your fingers ready. Here's some questions for the chat board. A little bit of review now. When we're fishing in the ocean, what's the best way to catch fish? And the answers 1, 2, and 3 is keep fresh bait in the water. But when we're fishing for customers, what are the 3 rules that always apply, the 1, 2, and 3? What do you remember? We keep sending frequent, word starts with P, to everyone in your DB. What do you reckon those blanks are? What do you reckon those blanks? Where Cindy has already chimed in there with the right answers, and that is right. Y'all type them on in there. Cindy's got it just right. And your process of typing and answering these questions will help you remember them in the future and make them a part of your database. We keep sending out frequent promotions, either at our website or with emails or with advertising or phone calls or knocking on doors. We have to keep busy letting our customers know that we're hungry and we've got something new and exciting to sell. So the answer there is frequent promotions to everyone on our database. Referring to bookkeeping, we need to fill in the blanks. The accountant's job is to focus on the annual reports, the big picture, the long term, but the bookkeeper's work is to focus on the D and the M reports. What do you reckon D and M stands for? What do you reckon D and M stands for? Daily and monthly. That's exactly right, Tasha. Thank you for coming in there first. And the rest, Nico, appreciate you typing that in. All of you type that in. Bookkeepers focus on daily and monthly, and they can give you that fresh information to help you change whatever needs to be changed to become more effective. For better sustainability in your business, it's great to have a diversification of all your profit centers, all the different things you're selling. What's the minimum number of profit centers that I'm encouraging you to try to have in your business as you get started? What's the minimum number of profit centers? Cindy, you're right on board there, 100% right. 5, at least 5, but you can have 25 if you can manage them. In my business, it's been around a long time. I've probably got 50. In Robbie's business at the hardware store, he's probably got 50,000. But the more profit centers you have, the more diversified you have, the better chance you have to bring in a diversification of customers, and more often they'll come. We want to remember there's 2 different things that people buy. We want to have some of these for them, things that they would be in the W, and then we want things that they in the N. What is that? We want products that people want and products that people need. It's important to have the mix, and with that mix, they keep coming back to you for different things, and when they come into your business to buy something they need, If you've got good merchandisers, then they'll see things that they want, and you'll have better chances to make sales. This is where we always mention about the by the way syndrome that we're going to keep talking about all the time. So fill it in the blanks now. Search engine optimization teaches us to focus about the content on every web page. And the better that we are at search engine optimization, SEO, the better in a position we are to fill in these blanks. H, customers, F, Y. How do you find customers? And the answer to that question is we do what for customers? Anybody remember that? Get those fingers ready. Help customers find you. That's exactly right, Sarah. You came in first, Sarah. Thank you so much. Help customers find you. So we're sitting around, we're drinking coffee, or we're wondering why business isn't so good this week or today. What answer do I want to creep in your head when you're wondering about what can you do to improve business today? And the easiest answer and the most effective answer that I can share with you that works for me is help customers find you. And sometimes it'll get slow. I'll be quite honest with you. I've had about 3 weeks of really slow business up until this week when it's been wide open. And that's the way small business is. It's like turning a spigot on and off. And sometimes there's no rhyme or reason to it. But I'll assure you, my friends, if you've got a good active marketing campaign, the good Golden Goose campaign, where you've sent out those promotions and you got your videos in place and you got a good customer base that you're sharing information with, they will find you when they need something and when they want something. So you got to help customers find you. Now, in bookkeeping, we have to set up our books when you're a brand new business. We have to set up our books, and setting up our books mainly involves getting started with what? A C of A. What might that stand for? And that C of A describes your different types of incomes and expenses. Robbie's kicked in there with the answer first of all, and he's exactly right. That's exactly the right answer. Your chart of accounts basically tells you how the different ways that you're going to spend money or whatever. Like I keep my chart of accounts right here from income items and my expense items. I keep a copy of it on my desk. So as I'm receiving money with my invoices or paying bills with my checks, I'm keeping in mind as to where that money is going, what it's about, and write it right on the check. So as an entrepreneur, as the owner of your business, that's a pretty good habit to get in to help you stay aware of cash flow, about where it's coming and going. A little difficult now, I'm going to test your memory. In this fall series, we've had so far tonight, we're at our 6th words of the week, and I'm going to go ahead and share week 6 and 7 because my Thursday night classes are 7 weeks. So how many of these words can you remember? How about just typing them in, whatever order you want to, but type in all the words that you can remember. I want you to get used to using these words. Using these words will help us have a mindset to increase our ability to think through and be aware and mindful of different things. There you go. Kick it in, Sarah. All right. Way to work it out. Sarah's got most of them listed right there for y'all to look at. Go ahead and type them in. Help us learn to spell them and to use them. And all of you, thank you so much. It's just great. So let's get into them now a little bit. Shrewd, mindfulness, assertiveness, endurance, and resilience. All those are proactive words. I have enjoyed using them quite a bit this fall. I hope that you are working towards installing those in your vocabulary to help encourage you and the way you're thinking to achieve the goals that these words kind of set out for us, in not only in our business, but in our personal lives as well. So tonight we're going to look at week 6 and 7. And so let's talk about those. I'd like for us to add poise to the list. Poise to the list. And to me, poise is more about self-composure and dignity. We'll get in some tight spots sometimes when you're talking with a customer, you're making decisions or making presentations around. And I know that Dr. Tamara faces this through her vocation as a pastor and now as a counselor. Poise is so important because when you have poise, the people in your audience or the person that you're talking to, it radiates over to them and helps them find poise. I think it's one of the most contagious situations that you can have in a very good way. If you're showing poise, that is lowering your voice and holding on to your dignity, whoever you're working with has a better chance of doing that as well. It's a word that we don't hear this used too often, especially in the election cycle. How many times have you heard the word poise used in all these advertisements? Probably very few. But when we look at what it can mean for you with calmness and elegance, having grace, self-assurance, tact, and confidence, when we find that candidate that has poise and is telling the truth for you, by golly, you might want to take a second look at them if the candidate on the other side does not. Also, and maybe my most favorite and most important, bringing it right down and turning the volume down, is be still when troubled. And we will get into jams now. We will get into times when we're not quite sure what we should do, or we're challenged for the first time with a situation and don't know where to turn. My suggestion to you is be willing to learn to meditate. Be still and be quiet and learn to take a few minutes to meditate. Maybe take all day, but turn off the chaos and turn off the noise, turn off the busy chatter. And I understand that you may look at my presentations as being busy chatter. I do it all the time, and I look at them sometimes and feel the same way. But I know there's value to it. But I also know as I'm wrapping up this series, you have to be willing to turn off all this outside noise and focus on where your moral strength is. Regain that inner strength. It is so important to us to do that, because when you're in control, and you have meditated and you're talking smoothly and you're thinking smoothly, you got the right mindset, that transmits over to the person you're talking to and working with too. Now, this be still and know is used in the Bible heavy duty, and there's a good reason for it. Of course, in the Bible, it talks about be still and know that God is with you, and you can give him or give Jesus what's on your mind and get it off your shoulders and off your chest, and how true that is. And the same thing applies when we're talking about troubles that we're having in our business or concerns, that sometimes just take a minute, turn off all the noise, even if you're turning off old Steve here, and just think about things and find your moral strength. After you've done that, you'll feel better. And after you've done that, I want to encourage you then to get back in the game. Wake up tomorrow morning, get out of bed, turn around and make it up good and tight and smooth so that you can say you've accomplished something positive today already to begin with, and start your new day. Be still and know, meditate, regain your battery strength, and then let's get back in the game with a great new day. That's what I'm encouraging you here too. Finding the endurance to stay in the game. In entrepreneurship, it's not making the $1 billion that makes you successful. In entrepreneurship, it's staying in the game long enough to get good at it and learn how to stay there and make some profit with less stress and less troubles and more smiles. Tonight's presentation is a three-part, actually. We're going to talk about record keeping with 4 parts: record keeping, depreciation, taxes, and some secrets I've learned through the years to help you close deals. Record keeping, of course, can speak for itself. Other items takes a little bit of concentration and pulling down on it. So let's get record keeping talking about now. When we talk about taxes, it's all about record keeping because that's what they're based on. So as new entrepreneurs, maybe you haven't had to keep records before, and I'm going to tell you right now that there's plenty of paperwork. I don't care how many computers you're using, there's still going to be plenty of paperwork to be generated, and there's going to be plenty of computer work to be generated. So know that you need to save your records. And there's lots of different ways to do this. In filing cabinets, as I have a stack of them over here, and computer files on your flash drives that you plug in and can save things on. The cloud has a lot of different ways to save information on the internet. And then just having off-site storage is important for lots of paperwork, and also saving old thumb drives. So remember those thumb drives, you want to save up a goodly time on one of them, label it properly, and then set that aside and get a new thumb drive and start anew. That way, if you need to go back and check on some old records, let's say you had a fire at your office or just lost your thumb drive or your computer died on you, lightning came along, it is so good to be able to go back and check your records like that. So I want you to be used to keeping, saving your information is so important. On a daily basis, as you're working, if you're new at this, if you're new at saving your information as you work, doing all types of Word documents or PowerPoints and things like that, it is so easy to get distracted and hit the wrong button and lose your work. I do it way too often. So I try to get in the habit of every few minutes to save what I'm doing, so that if I do get distracted or my computer dies on me, I can go back and at least catch up with most of my work and not lose it. Go ahead, please, and start that as a practice. It'll pay you great dividends through the years. Save that work often as you're doing it on your computer. There's some of your records that you need to keep forever, and of course you already know that. You don't need to keep your articles of incorporation, your important business documents, deeds and mortgages and stocks, and if you've done some copyrights, some documents have to be kept. And where will we be keeping those? Things like depreciation schedules, year-end financial statements, license and permits, trademark registrations. Where are you going to keep these permanent documents? Well, of course, safety deposit box at the bank is a good place to do it. If you've got a fireproof safe, that's a good place to do it if you want to keep it at home or in your office. I've got to remind you, though, a fireproof safe has limitations. So if you're really banking on that, what you want to do is to make sure that you want to make sure that you read the directions about how to store that, where you might want to put it, what degree temperatures it can withstand. I like to use filing cabinets in a off-site place that I'm sure is on high ground and that I'm sure has a very low likelihood of fire damages or such as that. My heart goes out to people that had items in storage all through our mountain counties. I'm sure a lot of those lost all their business records, so they got real challenges in front of them, which tells us and reminds us that we need to keep our records where we can get to them in an emergency or in a disaster type time. So as you're choosing those places where you're putting your filing cabinets or your boxes or such as that, are they dry? Are they high? Are they reasonably safe? So these off-site metal storage buildings sometimes are really good because very few people will break in and steal old records, so security is usually not that big a deal. But you choose a place that's on a hill, you choose a place that's got good lighting around it, and generally that's a low cost. After you've been in business for 5 or 10 years, you don't have so many records to keep. Those little off-site storage buildings will become more and more attractive to you. Those are the permanent records. A lot of stuff we have to keep for at least 7 years, and that's the law. We have to keep certain records for 7 years, make them available for audits if we ever have to be audited. But a lot of stuff that even that they're saying for 7 years, we might want to keep them much longer because customers will always be coming back to you amazingly how often and want some information from something they bought from you 10 or 15 years ago. In my business, selling tractors and farm equipment and things like that, someone that passed away in their late 80s or or older, and their family will want to find out how old it is when it was bought, ask me to appraise it for them, such as that. So I understand how important it is to be able to find your records. Now, last week we talked about how important it was to have your invoices numbered and dated so you could find them in chronological order. That's a great help if you're doing that. But 7 years will list over your bank statements, expense reports, payroll ledgers, things like that. And one thing I want to mention, especially now, if you're retailing right much stuff and shipping it out of state, I want you to pay special attention to know that your bills of lading. What is a bill of lading? That's a strange choice of word, isn't it? Bills of lading. What that is a shipping document that shows when something was shipped, where it was shipped to. And if you're shipping out of state, as we'll be talking about later, there's a chance that you don't have to collect North Carolina sales tax. But if you have an invoice that went out of state and you did not charge it North Carolina sales tax, when the auditor comes around for the Department of Revenue, they're going to ask you why you didn't collect tax. And your answer will be, well, I shipped it out of state. And if you ship it out of state, you don't have to collect North Carolina sales tax. So they're going to say, show me and prove it to me. So that's where that bill of lading comes in handy. So I suggest to you that you save your shipping notices, or actually save the actual document if you can, or a copy from your computer, and staple it to your invoice that's related to that. So as you're going through your audit, there'll be a record of it. And that'll help you move along safely. Because if you don't have that document, the DOR is going to say, well, you owe us the tax, and you have to pay it, and then it will be up to you to try to collect it from whoever you ship that stuff to, and that will be very, very difficult to do. So 7 years. I like to mention to you that 7 years is important, but I keep them 8 years. And the reason I keep them 8 years is oftentimes as you start in a new year, you're into March and April and May, here will come in a document through the mail, or it will fall out of a file somewhere that was an important tax document for last year. And I don't go back and untape the boxes and undo everything so I put one piece of paper in the box or the filing cabinet. I put it in this year's work, and I'll flag it, maybe leave a couple of paper clips on it just as my personal way of signaling that this was from last year, and go ahead and put it in. So I keep my items for 8 years. Another thing I want to say is, after 8 years, I suggest that you purge your files, and you actually open up those boxes that are eligible to be tossed away and destroyed, but don't destroy them until you kind of look through them, because lots of times in those boxes will be some items that maybe you want to keep as a permanent file. There'll be some important items there to you for one reason or another that you want to take out of those files and put over into your permanent file boxes. Do that, please. It will save you from losing some important records just by being a human being. That's kind of the way it is. But then get rid of the old stuff. Get it out of your way. It's not eligible to be audited, and might keep you out of a jam one day if someone's looking back at some old records trying to pin something on you. Okay, just a word to the wise. Now, man, is this relevant today? One reason we're talking about this stuff is in case of FEMA disasters. Now, 2 weeks ago, we wouldn't have talked so much about that, but we are in an area now where hurricanes come through and tornadoes come through, as Rocky Mount certainly knows, and indeed your area or your community may qualify for FEMA help or disaster funding, which means you can get some low interest loans. But to qualify for your FEMA support on a lot of situations, one of the first things that you have to do is prove to that FEMA clerk who's trying to help you how much money you lost or how much money you made. And sometimes they will have programs that will help you recover funds that you lost maybe during a certain period of months last year when your business is wiped out. And they will say to you, well, how much money did you lose? They're not going to ask you how much business you did, what the total amount of business was, they are going to ask you, what was your profit during those months? Because they will consider reimbursing you for the profits lost. But they're not going to consider reimbursing you for all the business you did. So it's important that you keep your records in such a way that you've got that in mind in case that question comes up. Also, we're talking tonight about tax avoidance and definitely not tax evasion. But as we do tax avoidance practices, sometimes we're trying to lower down our profit motives to the point to pay the least amount of taxes possible, which is what you're supposed to do. But if you're in front of the FEMA person or a lender at the bank, and they ask you how profitable is your business, then if you haven't been showing any profits, they're going to be less likely to come up with some support for you. It's a two-edged sword, and it's good to know. One big secret that can help you, though, a way that you can show that you didn't make any money tax-wise, but you still had a great year, is through the use of depreciation. Now, isn't that interesting? Most folks just don't have a clue about that when they're first getting started in business, but we'll talk about that a little later. So keep in mind that FEMA's may happen, and God bless them, and our prayers go out to all the people that are helping to get some help from FEMA. And I understand they are really working hard, irregardless of the misinformation. I've got a number of customers that I've talked to in the western counties that say that not only is FEMA there, but the U.S. Army is there, and the National Guard, and so many thousands of volunteers. It's incredible. But FEMA is working hard in the U.S. mountains, according to people I've been talking to. Let's talk about depreciation now. I say in every one of my emails that I send out to people, I appreciate the opportunity to serve you. I appreciate the business that you give to us. So what is depreciate is all about? Depreciate is not exactly the opposite of appreciate when we look at it from the standpoint of numbers, but it's similar. Because you can buy an item, you can buy an asset and hold on to it, and it may appreciate in value, which means the value will go up. There are some situations where that's the case. But when you buy something, depreciation is a real factor, because almost always, once something is new, it's got its new value. But it starts going down through fair market value and right on down to wherever it's going to be. There will always be a fair market value, but it will probably be going down as it gets older. So what is that bad news? No, it's just life. But it does affect us in our business big time. And there are college courses on depreciation, and you can read for months about it, on how it might affect you here and there. I mean, people get right into the nitty-gritty about depreciating and amortization of the money that you borrow to buy something that's depreciating. All that can come into effect. We don't need to get into that tonight, but you do really want to and need to understand how depreciation can help you in tax avoidance and what it's all about. I searched for months for the best short article that I could find where someone is explaining in a lot more depth than I can do in a 2-hour webinar some details about depreciation. And I found an article published by Lisa Borga in 2021 that defines depreciation in understandable terms for me. So hopefully if I can understand it, you would be able to. And I've got you a handout with that in it. It is a handout that you do want to flag and you do want to pull out and read through when you have a chance to do some reading. It is real good information for your DNA as an entrepreneur. So please find that. But now let's skim it. Let's look at the highlights there together to give you a better understanding of how depreciation will affect you and your business, whatever business that you're in. Definition: the reduction in value of an asset with the passage of time, particularly due to wear and tear. You buy a new car, you drive it off the lot with 10 miles on it, it's worth less money than it was when you pulled out of the driveway. Depreciation is real. and it's always working for and against us, and you just need to be aware of it, but as a business person especially. So assets the real assets, hard assets like machinery and equipment and office equipment and furniture and fixtures and things like that can always be pinned down. And every day that they're used, they generate a loss. A lot of items that we're buying generate revenue. So let's say that we're buying a delivery truck, and that delivery truck, while it's taking money out of our bank account or we're making payments on it, make us have less money each month. Hopefully when we're buying something like that, they're generating income for us so we can determine how much to spend on it, what our monthly payments can be, because we're weighing those monthly payments against how much income it's bringing in. That's part of the thinking process when we're buying and selling items. So depreciation and assets are items that we talk about all the time in business, especially if you're buying equipment, larger ticket type items, firm assets. So let's say that your business is just started, and ever how you got it there, you've got $10,000 in the bank tonight. 10 grand in the bank. Congratulations. That's a lot more than I've had a lot of years in the bank, and not all that recent as well. So if you've got 10,000 in the bank and that's your only asset, then your business is worth, and here's a new word we're going to use, your business's net worth is $10,000. So congratulations, we can put a fork in that and chew on it. So let me tell you, though, that you're ready to buy something important. Maybe it's a new truck or a forklift or a saw for your cabinet business or something large, whatever. It's going to cost you $5,000. And you need it in your business, and you are planning to buy this because you know that it's a necessary asset to help you make money. So we go out and we spend that $5,000. My question to you is, first question related to this. When you spend that $5,000 and cut your net worth in half because you only had $10,000, does that mean that you reduced the value of your business? Did you reduce the net worth by 50% down to $5,000? Because it's gone. But let me tell you, no. The money may be gone out of the bank account, but that asset now, that new truck or that new saw is sitting right there in your driveway and you own it. And by golly, it is still worth $5,000 if it's almost brand new. So the value of your company, the net worth of your company did not go down. It's still there. It's just recorded in different ways. Now it's recorded, your cash stays in the bank, but now that asset that you bought, and this is a hard, tangible asset, that asset that you purchased now is listing on your depreciation sheet, the word depreciation. That is, we got an asset that's not cash, so we're going to keep up with its value in a separate way in that chart of accounts type talking. We're going to keep up with it on our depreciation sheet, which is one of your primary financial statements. So you got that brand new saw, we got the liquid asset of $5,000. Our business is still worth $10,000 as long as that saw is new, but tomorrow that saw value starts depreciating, and we're going to keep up with that. So our book value will change as the depreciation goes down on the saw. Now you have the option, the U.S. government gives us the option to set up depreciation values in different schedules. And general returns, a 5-year depreciation has been very popular, 7 years as well. In some years on certain tools, the government will let you depreciate 100% the first year. You know, certain economy situations or pushing U.S.-made products, automobiles, manufacturing machinery, the Congress plays games with that actually to help different manufacturers or different politicians have better political years, but we're small business people. We're interested in a depreciation schedule. 5 years is the norm. So we're going to consider for tonight's purposes a 5-year depreciation plan. That is, we're going to set this asset that we bought to depreciate in our books over a 5-year period. That means that each year it's going to reduce in value by 1/5, and at the end of 5 years on our books, it's going to show it's worth 0. Maybe it's used up, maybe it's gone, but it's going to be 0 on our books. But maybe it's held its value or even appreciated, but on our books, it's still going to be at 0. This is the first time I'm going to mention it, and I'll mention it several more times. There is a difference in book value that we're talking about here and fair market value that we've been talking about before. The book value is strictly a numbers value, showing the value of assets tax-wise. Okay, this is all about taxes. Okay, so here we go. So on the first year, it's on there at $5,000, what we paid for it. Second year, the book value would be $4,000, and so forth. So in the 6th year, it'll be 0. You with me so far? With me so far? Say over in your chat board, say so far over there, just yes, that you're following me. If not, I'll repeat some of this. Show me in the chat board. So far, so good. Thank you, Dr. Tamara. That's good. Because now we've talked about what the book value is. Thank you, Sarah. We've talked about what the book value is, showing our company's worth. Well, we're taking a loss on that company's worth. The government didn't make us take all that loss the first year. You know why? Because if we took all that loss the first year, it may have put us in red ink and said that we're losing money in our business. But depreciation, let's fudge on that a little bit, and that way we start getting a little leadway in for some tax advantages. The government says, I encourage you to buy products, especially made in America. I encourage you to do that, and they got to go on your books as an asset, and you don't have to depreciate them because they're not going to stay at the new value. However, the government's going to say, to help you have that incentive, we're going to let you take that depreciation and use it to lower the amount of taxes you have to pay. Okay. Thank you, Mr. Government. We appreciate that. So as that depreciated $1,000 per year, over on your tax report, you're going to show that you're going to take $1,000 per year depreciation value for it. Now, that's not going to save you $1,000 in taxes. No, don't let that get in your head. But what it will do is that one purchase for over 5 years will reduce your tax exposure, will reduce your profits by $1,000 per year. Hence, will reduce the amount of taxes that you have to pay. That's a big deal. It ends up being a big deal, especially in some businesses that deal in hard assets or lots of inventory that's turning over and such as that. So it's a big deal. And as you do that depreciation, as you take that write-off, there's a new word for us, write-off. You've heard that all your life, I'm sure. Well, this is where it comes in. Your deductions are write-offs. And one of the primary deductions for lots of small businesses is depreciation. That makes a difference in the taxes you pay. But here, going full circle back to what I mentioned a while ago, let's say that your tax returns show that you didn't make any money or maybe even lost money. But the person that's loaning you money, if they're experienced, will look up and see how much depreciation you had. Then they'll take that depreciation write-off that you use and consider it income and profitability for you, which can shed a whole different light on whether or not they want to loan you money. People that know how to manage their depreciation are usually astute, savvy business people that lenders really like, because lenders rely on folks understanding depreciation, and if you show that you understand depreciation, it will improve your posture with any lender. Okay, I hope that sunk in. I hope you got a thumbnail sketch of it. And I'll talk about this a little bit later because there's some things I don't want you to think, okay? So let's talk about business expenses and the different classifications. As we're talking about deductions, we're going to see deductions are related to money that you spent and you want to take it off your tax exposure. Two kinds of expenses now become really important. General business expenses, general things that we're buying all the time, things that we buy and they're gone, used up products. Those are general business expenses, general write-offs. But then there's these other expenses that we've been talking about now, buying assets. Assets, by definition, are something that's tangible, and assets are items that generally last longer than 1 year, many years hopefully. Those items are called capital expenses or depreciable items. Capital expenses or depreciable items. They are not automatic write-offs. A portion of them each year will be a write-off, depending on how you set it up in your depreciation schedule. Okay? So let's look at these things in different. And we'll come back to those as we go, but I want that to kind of marinate a little bit with you. In taxing now, accountants that I speak with on a regular basis, and through the years, when I ask them a question, I always ask, what's the best advice you have for me to give to brand new startup entrepreneurs? And every one of them, as if it was the first thing they studied in college related to this, tell me to encourage you to make sure that you pigeonhole, that you set aside, that you put it in a special place, that you do not spend tax money as you collect it. And it's so easy to do. You do an invoice, a customer pays you, it's got some sales tax money in there, and you put it in your bank account. And if you don't keep up with this tax money and you start paying your bills here and there willy-nilly, then here's what's going to happen. When the tax bill is due on the certain days of the month, you will have spent that money and it's not going to be there to pay your taxes. And that is a big, big, bad day, because failing to pigeonhole that tax money and have it ready to spend and not have to worm around and try to find the money and take 2 or 3 days to pay that bill will cost you interest, will cost you fines, and if you don't pay it, it may cost you the business. I mean, these tax folks will come and put a padlock on your door if you don't pay the taxes. Now, you're going to be collecting sales taxes if you're retailing. And if you have employees, you're going to be having employee withholding taxes that have to be paid. So just because you had enough money to write the payroll check to your employee didn't mean that you had enough money to write the payroll check plus pay the taxes that have been withheld that you're going to have to send in. It's not up to the employee to send it in, it's up to you. So that has to be part of your mindset. And I'm not trying to scare you here, because every one of us that have ever been in business have to deal with this, and it will become one of the natures that you have. And it's a real good reason to try to find a bookkeeper that can help you with this stuff. Because I want you to be concentrating on selling and looking after your customers. And sometimes this is some of these folks we have to hire so we can get on and make money and let other folks help us keep up with the bookkeeping and the book work. Pigeonhole the tax money. So I've seen a lot of customers through the years, and I've dealt with a lot of subcontractors. I've probably helped 500, 600, maybe even more subcontractors get started with their businesses because they need a backhoe or they need a tractor or forklifts or whatever it was, and I was in that business, and I'd help them get business, and then I'd watch them struggle sometimes when they get in trouble with the tax folks, and it was because they didn't pigeonhole that money. Okay, so keep that in mind. Business expenses are all those items that are gone. There's no hereafter. Things like rent, travel expense, payroll, those are deductible general business expenses. They're not going to be on the depreciation list. The capital expenses, however, are usually on items that are, well, they're always on items that are tangible, have life over 1 year. They are something you can point out and show and see a serial number on, or show the date that you bought it. And all that's important because you don't keep up with those records. Once you enter an item over on your depreciation list, those records stay alive as long as the item is on there. So it's important you keep up with those. Let's talk about maybe some ands and ifs. And the beauty of this, and what I really want you to hold on to as a real positive, Cindy and Sarah, is that each business will treat these items as they purchase them as they want to. There's no law that says you have to do this and you have to do that. There's general guidelines, but depending on the size of your business or what your direction you're going in or how much tax you want to try to avoid on this particular item, you'll play it different ways. So let's say that we're buying a $250 printer like this HP I've got right here. I bought that printer about 8 years ago and it's still running just like new, and I did to put that on my depreciation list. I did call it a capital expense. But if I was one of these insurance companies that are serving all these claims around, and like Sarah is working with down in Georgia, those adjusters down there, they're carrying these printers around in their car and plug them in at night in the motel room to do all their work with their printers and give their clients copies of stuff. I mean, that insurance company may have 2,000 of these printers, and they will call that a general expense. It'll be a write-off. There's no way they're going to put 2,000 printers on their books and keep up with the serial numbers and the date at the bottom and how much it was. I mean, the money, it'll cost them more than $250 just to do the book work. But a small company, it's worth the effort. So how about a $2,500 printer? Most everybody will keep up with that purchase and depreciate it through the years for the tax advantages. And first time I mentioned this, to increase the book value of their company. It's kind of nice to have a company that you own that has book value. And the more the book value is, the greater ownership value that you have. Now, when you bought the printer, maybe you bought a case of printer paper for $250. That would never be depreciated. It would always be an expense item because when it's printed, it's gone. Tires for your truck, same situation. $2,000 set of tires for my small company, I depreciate it because they'd probably last me at least 6 years. A large trucking company would always write that off. A brand new engine, I definitely depreciate that at a $17 value, and probably most trucking companies would too because it's kind of easy to keep up with, and they're keeping up with the mileage and when to take it on and off the books. Let's say you're renting some stuff like a forklift for a truck. Rent, always write off. It's not tangible, therefore it can't go on your depreciation list. Brand new website, spent right much money on it, $2,500, $6,000, direct write-off. It's not tangible, therefore you can't put it on your depreciation list. Payroll, write-off. CPA expenses, write-off. Brand new set of tools, $4,000 worth of tools, write-off. So maybe you're going to stop me there and say, who buys a $4,000 set of new tools? Very few people. Most of us go to Lowe's this week and we might get $100 worth here, and next week over at somewhere else and get $100 worth. Well, here's something you can do. Keep up with these type of items that would go in a toolbox, whether it's certain types of tools for my business or your business. But at the end of the year, if you've got something to show for it, you've got that $4,000 value in new tools that you purchased, then keep those records together. And I'll mention to you later about the different pieces of receipts that you keep up with. You want to keep these items like this that you can combine small things that you bought and combine it into a set and then put that on your books as a depreciation items because they're going to be around and you can show them in the toolbox and prove you've got them. let's say that you rented a forklift from me, and I used to rent lots of forklifts for $1,000 a month, and you rented it on a rent-to-own plan. So you paid me that $1,000 a month. Is that a depreciable item? Nope, it certainly isn't. But how about the delivery costs for it? Delivery expenses, transportation expenses? Nope, can't write that. I mean, you do write that off. You can't depreciate it. But after renting that forklift for 24 months, you've got $24,000 invested in that forklift, don't you? No, you do not. You got $24,000 invested in the rent, and that is a write-off, 100%. Therefore, this is a good example to say to you, maybe you needed a lot of write-off this year. Maybe you're having a banner year, making a lot of profits, and you'd really like to reduce your taxable exposure. So maybe when it was time for you to consider buying or leasing or renting a forklift, it was to your advantage to rent it rather than purchase it, because you were able to write off more of it during a given period of time. Okay, but let's say that you did rent it and you paid that $24,000, but at the end of a certain period of time, your rent-to-own option is $5,000 and you can purchase it. It'll become yours and you quit paying rent. And you decide to do that. So does that forklift go on your books for $25,000, or does it go on your depreciation books for $5,000? It goes on your depreciation list at $5,000 because that's what you actually paid for it. And this is when we full circle back around to show you the difference in book value and fair market value. The book value of the forklift is $5,000 because that's what you actually paid for it. But the fair market value, like if you wanted to sell it, the fair market value on it might be $20,000. So the value of your company, book value-wise, is $5,000 if that forklift was all you had. But fair market value-wise, the fair market value of your company would be $20,000. Big difference. And in every company, there's always going to be a big difference between fair market value and book value. And the rest of this crazy story is it may be one way or the other, up or down. But you want to be mindful and savvy and aware that this is the situation that exists. So when I say to you, I want you to type in, I do understand this, Steve. I understand that book value and fair market value are not the same thing. If you understand that, please type in yes. That's all I want you to do. Yes, because it is important for the rest of your entrepreneurial life that you're able to understand and use whichever one of these definitions really make a difference for you. Thank you so much for paying attention. I appreciate it. So doing tax is a thing to do, and we're going to talk about it here in October, and then over in December, we're going to talk a lot about all this stuff again, so it'll be on your mind as you get ready for your tax prep. As a matter of fact, we call that webinar tax prep, and I hope that you all will be a part of it. What do you want to remember? You want to try to remember to hire an experienced bookkeeper that has some type of experience with your type of business. And that's hard to do sometimes, but keep searching till you can and get as close to it as you can. Someone that's already familiar with your chart of accounts, the way that your business works, will be able to grasp on and do a better job taking over your books quicker. I've got a great bookkeeper that's helping me. We're in about our 13th month now, and after 13 months, I'm used to transmitting information to her, and she's kind of got a hold of what we're going on. So our next year is going to go a lot smoother, I'm sure, and we're both going to be a lot happier than we were our first year, because there's a lot of work and a lot of stress. I had the same bookkeeper for 43 years, so I didn't have to cross these bridges, and you're just getting started, so just words to the wise. Talk long and hard with your bookkeeper. Make sure you're going to be able to communicate with them. If you go into a CPA, a certified public accountant now, and maybe you don't need to do that as your business is first getting started, you might be able to work it out with a bookkeeper just fine, especially if they're experienced in doing personal bookkeeping and personal tax returns, because as a brand new entrepreneur, you may be operating as a sole proprietor, and they can handle that bookwork just fine. There's a good reference here online that you can go to with the IRS. Has some good reading related to choosing your bookkeepers and your accountants. Now, the two words that most people don't even go near in these webinars, but I feel good about it, is the difference in tax avoidance and tax evasion. I want you to be good at tax avoidance and do not want you to have anything to do with tax evasion. Tax avoidance is legal. It's the way you manage your business, like we just talked about managing depreciation. Can have everything to do with how many taxes you have to pay at the end of the year. Tax evasion is when you lie, cheat, steal, misrepresent things to dodge paying taxes. Folks are real good at catching you at that, and indeed might cost you penalties and interest, or maybe even your business, or even jail time. So stay away from evasion, okay? The hot buttons as we get into the deductions. The deductions, the write-offs, mean the same thing. Most people talk about are coming in a pack of about 25 different things for entrepreneurs. In your handouts is the 25 main deductions that entrepreneurs usually deal with a little bit of information and text in there that you probably want to read through and get a general understanding of them. And then as we move closer to the end of the year, like over in December, come back to that webinar and you'll be able to grab onto them a whole lot better. But your home office deduction, travel and meals, use of your car, taxes, insurance, and such as that, all these items are very important for you. I'll have a few things to say about a few of them here. Your home office deduction is one that comes up with almost every entrepreneur. If you're working at home, even if you have a business location elsewhere, you may have a business home office as well, and you can have both. If you're just working out of your home, then you can take a deduction on the square footage percentage of your home that you're using for an office. Quick example, you've got a 1,000 square foot apartment, and you've got a corner 10 by 10, 100 square feet that you call your office space. That means that you'll be able to take 10%, 100 versus 1,000, 10% of your household expenses as a business deduction, as a write-off. No questions asked. However, you may be asked to document that square footage, okay? Now, if you have an outside office, a detached building, or even something that is definitely not a part of your regular living area, then you could, as I do, rent as an individual my company that building on a monthly rental for office expense. And as long as you have a rental agreement spelling out that rent's to be paid on a certain date each month and how much it'll be and what expenses the landlord's going to pay, which is everything, and versus otherwise, then you've got a document to back you up to have a good piece of income that the company gets to pay you every month. Now that money coming to you is called rental, and it is taxable, so you'll list it down. But that money leaving your company goes out as rental, and it's 100% deduction, so it's generally a wash there. But it is a way for you to start getting some cash out of your company like that and covering this important deduction. Lots of ands, if, and buts there, but the bottom line is you can pay for a lot of expenses in the gray areas there with company money that you don't have to pay with your personal tax money or already tax money. So give that some consideration. It may be a help to you. Travel, meals, and entertainment used to be anything goes, but now you have to pretty much document it. If you don't call it a deduction, you don't have to name the customer, the dates, what you were doing, and indeed make it clear that it was a business cost. the use of your vehicle, the use of your car is really important. Most everyone wants to know, should the company buy the car or should I own the car? My advice to you, in most situations, with the current mileage deductions, you're pretty much better off for you to own the vehicle and let the company reimburse you for the miles that you ride for company miles, for business expenses. That value now is 70, I think in the 70-cent range per mile. So if, let's say that you drive your car 100 miles today on business, then the company owes you $70 reimbursement to cover your expenses. Now, the company don't pay for the gas, don't pay for the tires, don't pay for the maintenance. You pay all of that out of your pocket, but the company reimburses you on the mileage basis. Customers that need special trucks and equipment, or expensive trailers and such as that for company use, then they may be better off to let the company own that vehicle and pay all the expenses and not get into this mileage situation. However, if you're personally driving a company vehicle, then you're going to keep up with your personal miles on that and pay the company back per mile that you use it. So there's record keeping either way. Just be ready for that, and I'll be glad to send you more information, or you might want to talk to your bookkeeper on the advantages of that. Okay, insurance. Insurance is pretty much all deductible. I would even say that you want to talk to your independent insurance agent. There's lots of insurances that you can buy on yourself, on your personal life, that the company can pay 100% of the policy as long as it's 51% owner of the benefits. That means that the other 49% you could designate beneficiaries to other people. These laws are changing, so I always qualify this with saying there may be a really good tax avoidance opportunity there for you, or asset building opportunity there for you with life insurance policies, especially whole life policies. So you may want to talk to your insurance agent about that. Business training, deductible, but you need to keep up with it. Clothing that you're wearing in business, keep up with it. Generally, it would be a deduction. You can't go hog wild with it, go overboard, but a certain amount of clothing that you might use, call it uniforms for your work, and that might be a good tax deduction for you. Words to the wise, and there's a whole lot more. But if you will go to the handout that has been mailed to you, the study guide, there's a lot more information there as well. Let's talk about the tax preparers and collectors. That could mean that you're going to get some red flags, but just words of caution. When you're doing your book work now, and I'm in the middle of that now, kind of organizing my taxes to be able to turn them in after the first of the year to my bookkeeper. Keep up with everything. Start grouping it in different types of units, different types of categories, or different types of accounts. Put paper clips on them, because if you just go into your bookkeeper or accountant and give them a big bag of loose paperwork, then your bill's going to be much higher. Because accountants account for things. They will look at each piece of paper, make a note of it, what it is, what account it goes into, here and there. Every time they pick up a piece of paper, your bill goes up because it's more time involved. So you do all the sorting and generalizing that you can, and just give them the summary of how these bills added up. And that'll save them from having to do all that different individual paperwork and deciding what group this goes in. Yeah, it's going to take you some time to do it, but I will assure you that you can find some weekend time or extra time to work through this really quick, because you're familiar with it, or maybe even you're doing it month by month as you go, so it's not that big a deal at all. Give that some serious consideration. It can really help you. Who are the people that are going to collect taxes from us? And taxes will be called different things, permits, license, fees, estimates. There are a lot of ways that they do that, but I want you to understand you got four folks that are going to take your money: the city, the county, the state, and the federal government. The city and county folks are easy to find and easy to deal with. The city is usually at the clerk's office. At the county, it's at the county seat for your tax collectors. And those folks are usually really easy to talk to and quite nice and polite for you. They tell you what you need to know. Ask in advance. Ask all the questions that you want. With North Carolina, we're very lucky in North Carolina to work with the Department of Revenue. So we'll be referring to them as DOR. North Carolina has a really business-friendly atmosphere, as does the Secretary of State's office, that they are go all out to help an entrepreneur, a new business. So don't be afraid to go to one of the local tax offices and talk to them about them. Good news is that each one of our small business centers usually have a good relationship with the DOR people in the area, and they can get information for you as well, or even maybe set up a meeting for you. North Carolina, you can generally pick up the phone and call someone and talk to an individual that'll tell you their name and be quite helpful and help you get around. So that's not a bad thing to do. The U.S. government, however, the IRS, and I don't have an axe to grind with them at all, but they are just so large and so spread out and so complicated. My advice to you is when you're seeking information from the IRS, I suggest that you have your bookkeeper be in touch with them, and or you have your accountant be in touch with them. They know the best people to talk to that they have worked with through the years. They can get the answers quicker and better without so many questions and misunderstandings. This keeps you out of the loop. Keeps you from having to worry about, well, if I ask this question, does that mean they're going to come in and start auditing me or ask me about the questions? That's why it's to your advantage to let your bookkeeper or your accountant communicate in those situations for you. Anytime there's an audit situation or you're questioning whether or not you should or shouldn't pay taxes on this, same thing applies. Let your bookkeeper or your accountant do the talking for you. Kind of liken to, if you're going to go in a courtroom and be questioned or be put on the hot seat, you want a lawyer sitting beside you. If you're going to go into the environment of the North Carolina DOR or the federal IRS, it's a good idea to let the bookkeeper or the accountant work through the issues without ever mentioning your name. Just a word to the wise. I hope it works for you. Where can I find these people? Where are they? Well, in your handout, in your study guides, are the phone numbers and the addresses and contact information for each one of the agencies that you'll probably be working with. Primarily NCDOR is who business owners usually work with directly. Now, good news for you. Last month, I asked my bookkeeper to go to the North Carolina Department of Revenue and ask a few questions on your behalf, on behalf of questions that have been asked for me over a long time. And that is things related to vendors. As you're setting up your business or you're getting ready to go into business, like Miko is doing all the time and Tasha plans to do, it's important, if you hadn't ever been there before, that you kind of get a little bit of information. So I've given you in your handouts, in your study guides, several important pages that refer to different regulations and statutes. So when you see on these slides, I'm referring to page 119, that's the information that came back to me. So that if you want to read in depth what it actually says in the codes, in the laws, then I'm pointing you right to the place that you can read it for yourself. So the question was, when a vendor sets up an event at a craft fair, are you required to add and collect and report North Carolina sales and use taxes? The answer was a clear yes. There wasn't a maybe, it was a clear yes. So yes, if you're going to a fair and you're getting ready to start selling products, even if it's in your local community right down the street, does the law say you should collect sales tax? The law says yes. Okay? I know that lots and lots of people kind of slide on this, but the law says you're supposed to collect those taxes. If so, what rate should you charge? How much tax should you charge? Should you charge for the rate for the county that you live in, which may be 7%, or the county where the event's being held, which may be 8%. Well, the law is clear on this too. You're supposed to collect the amount of tax where the event is being held. And they go into a lot of details in the guidelines on page 24 through 28. Next, are North Carolina vendors required to collect North Carolina sales tax when you're shipping products out of state? Like we talked about earlier, why you want to keep up with those shipping receipts? The answer is a clear no. No, you're not required to collect North Carolina sales tax from someone when you're shipping it out of state. That's North Carolina tax. But are North Carolina vendors required to collect sales tax for the other states that you're shipping to? Are you required to collect the other states' taxes when you ship into their statements? Now, unofficially here, because this is a huge gray area nationwide amongst all retailers. And generally unofficially, folks might say to you, see I'm playing with these words, many folks might say to you, if you're not selling over $100,000 worth of products a year in a certain state, probably not. If you're not selling over $100,000 worth of material per year in a certain state, probably not required to collect taxes for them. Now, all the states are trying to figure out wrinkles to get vendors and merchandisers to do this, but right now this is kind of the lay of the land. But if you look at what the law says, and it gets deep into the ins and outs about it, and it kind of boils down to each state law is a little different. So 50 states out here with a different set of laws can get real complicated. That's kind of why the rule of thumb is, if you're not dealing with a whole lot of money per state, they kind of aren't going to pay much attention to you, is what a lot of folks have said to me. You have to weigh that out on your own and talk with other people in your business and in your community, but this is what the law says, and I've given you a copy of it. Many times at a sales event you might go to, you may sell less than $75 worth of material. Heck, you may sell only $25 worth of material, and you collect 20 cents worth of sales tax, or a nickel sales tax, or $10 worth of tax. Are you required to report that? The answer is yes. Yes, you're required. There is no minimum. There is no minimum. Now, you might file these taxes monthly or quarterly with some type of prepayments, but you're supposed to keep up with the taxes that you collect, if it's a penny or if it's a dollar, okay? Does everybody do that? I'm told probably not. Unofficial answers. Does North Carolina DOR offer a fact sheet or guidelines related to the things we're talking about here? And the answer is, oh yes. They've got a detailed fact sheet, and it's at their website, ncdor.gov. It's under frequently asked questions. So this is where I put the ball squarely in your court. You go there, you look at it, you listen to what's been said, and there's all kinds of bulletins about it that you can refer to from that website. Am I saying this to scare the heck out of you? No. I'm saying this to you to let you know it can get quite complicated. So as your business grows and you're doing more and more business and collecting more and more taxes, then indeed you might want to consider that. I've been told that at some pop-up events, the sponsor of the event indeed collects all the money and pays all the taxes for you. I hadn't had an occasion to do those individually, but that kind of makes pretty good sense, so that when your customer comes in, they do business with you, you give them a receipt or some type of document, they pay up, and the sponsor actually records the amount of sales and the taxes that were collected and does the reporting on your behalf. So that's kind of interesting. And if I was running a pop-up show, I'd offer that to my vendors. When you're a craftsman and you're building materials to sell, let's say you're growing flowers and you're selling cut flowers. You're selling them in vases or with certain other material. When you're putting together from raw materials a sellable product, do you charge and collect taxes on the finished product? Well, they say that if you paid taxes on all the individual things that you purchased, like the seeds and the fertilizer and the this and the that and the vases, then no, you don't have to collect sales tax on the finished product. It's interesting. However, you don't have to prove that you did pay taxes on all those raw materials. And the other side of that is, if you are putting together materials for resale, as you would be, then you really did not have to pay taxes on those raw materials, this and that. And if you did, you can ask for a refund of those taxes on your tax reports. And if that's the case, then you do need to pay, collect and pay sales taxes on the items that you do sell. So you're either, they don't want you to pay the taxes but one time. If you're not paying taxes on items that you are buying to resell, then you need to keep up with all that, okay? And when you do sell, when you do sell it, you don't have to. You do have to collect tax. But if you are paying taxes on everything that you're buying for resale, you want to keep up with those taxes so you can ask for a refund. All right? So give that some thought. It may work one way or the other for you, but it's very, very important. When you're reselling and asking for discounts or refunds on those items that you're reselling, that means you have to go through another tax account application, and you'll get a North Carolina resale tax certificate where that you would present that certificate and number to anyone that you're asking not to charge you tax because you're reselling. Lots of good information there. I've given you lots of links to go on, and I sincerely hope that this little conversation helps you. I know it's got a lot of questions related to it. Different types of taxes come in a lot of different ways. Some of them, the most prevalent, are withholding taxes, privilege license, unemployment insurance taxes that you need to send in, or withholding issues, and franchise taxes. So congratulations, you're going to get to pay franchise taxes, even though maybe you don't own a McDonald's or a Chick-fil-A franchise, but we still get to pay franchise taxes. And you will see that on the bottom of your state and your federal tax forms. It's called franchise tax. What that is the governments are figuring out a way to collect a little bit of money from you, whether you have to pay any profit taxes or not. And they call it franchise. It might be $100 or $200 state and federal, but even if you didn't make any money, even if you lost a lot of money, there will be a franchise tax to be paid. It's just the cost of doing the paperwork, is the way I look at it. Now, county taxes are a different situation altogether. They come into play a whole lot different, where the state and the federal governments collect taxes based on your profits. The counties base taxes on, guess what? Your assets, things that you own. And things that you own are all listed on that depreciation sheet that we talked about earlier. And when you're filing your county taxes, generally that depreciation sheet will be the basis for you to find all the information you need to talk about the values, your book values of your company. The auditor's radar screen is a screen that we all generally want to stay off of. And the good news is that very few, less than 1% of returns are audited, so there's a good chance that you're not going to be audited, but there's a good chance you will be audited if you don't pay attention to these flags. Number one, make sure you're dealing with a tax preparator that is honest, got a good reputation, been around a while, and that you can verify that they are not in trouble. Sometimes you can search on Google about them. Sometimes you can ask local folks that maybe you might want to ask them if they can give you a reference. but you don't want to deal with people who are offering you a guaranteed refund. That's the ones that are out to get you. A guaranteed refund means that they're going to probably manipulate your tax returns to make sure you get money coming back in, because the government will send you that refund. But then when you're audited or check out the refunds, you may have to pay it all back with fines and penalties. And I'll guarantee you that preparer who got a piece of the action of your refund or charged you a larger fee is going to be gone, and they're not going to be here to stand with you. So be careful on who's doing your tax returns. Report your income. The tax folks have good ways to estimate and know what you're taking in, whether you report it or not. They'll look at how much you're spending and how much you say you're making and do some comparisons and say, well, they must be making some money they're not reporting. So be honest on your reported income. File on time if you can. If you can't, make sure you've got a good reason, and try not to get an extension year after year after year, with one exception. Filing as a business. Sometimes you cannot fill out that county tax return until your accountant gives you your depreciation sheet back around April. So counties are used to this. So with businesses, asking for an extension is not that big a deal, because you really probably need to do it. And you need to do that in December when you get your tax filing information. Go right online before December 1st and ask for an extension. Every county tax agency has got a website now where you can go and click on a certain date under business returns and ask for a business extension. And if you get the extension, it's always granted. They generally send you back an email to grant it, and you don't have to pay a 10% penalty because you didn't ask for it. So let's kind of level the playing field here for a minute. Looking back, important things to help you move forward with your business. Earmarks to put in your tool belt, to put in your DNA. Try not to offer take it or leave it. Try to give your customers options. Remember how important the RFCs are, the raving fan customers, and we want to stay in touch with them. Work on your database. Build a database that gives you an automatic tool to send out information and promotions. Make sure your mobile web page is strong. That page that people see on their telephone when they're shopping at your site. Get a Google My Business on Google account. It's free, it's pretty much free, and it's so powerful. Work on your landing pages and make sure they're made out to sell. Get testimonials and put them at your website. Add as many videos as you can as soon as you can. The key to our marketing is looking for that great magic marketing moment. When we have the ability as often as possible to ask our customers, what can we do to give you 100% better service? What products do I need to stock? Do you know who's going to buy something in the future I can send an email to or give a call to? Help me find a new customer. What are you thinking about buying and when? Is there something I can do different to help you or help your family as a business person? Always be inquiring about how you can improve your marketing capability, your profit centers, to better serve in the future. If you're thinking about better serving in the future, you're going to be here. Those people that don't, they're probably going to be gone, or their business is going to get real slow. Get a drink of Coke here. Is there a maximum amount that you can deduct? I don't think so. I think you can deduct enough to show that you lost a lot of money. And the good news is, as a business person, your losses can carry forward till next year and the year after that and the year after that. Which is to say, you may lose a lot of money this year as you're growing or circumstances come along. And next year make a lot of money, but because you lost money this year, that loss carryover can apply to the money you make next year. And these dates change, and they're different for different businesses, But that really gives you the ability to stay in business and if you have a really bad year, that means that next year if you have a really good year, you get a little pat on the back and don't have to pay so much money by carry forward losses. I understand that book value and fair market value are different. That's right, they certainly are. Okay. 6 weeks ago, we would have been sales 101. 5 weeks ago, we'd have been sales 202. A couple of weeks ago, we'd be sales 303. We'd be juniors. But tonight, I mean, this is the end of the class, so we're at sales 404. And I want to share with you some things that I've learned through the years that other people have taught me, and things that I think that will help you to better understand why a very few salespeople make most of the sales. That's in every organization, every company across the world. The people who know the little things end up with a lion's share of the business. So there are a few secrets I want to share with you. And I hope that they sink in, and I hope that they help you. And you apply them to you in such a way that works. Now, we talked about in week 1 about ABCD, always be connecting the dots. But when we're talking about selling and closing sales, it's ABC. It's always be closing. And I've heard this from every person that's ever studied hard or went to training in real estate business. Every successful real estate business will say, one of my foundations is I'm always closing. Be thinking about that. What can I do to close this sale? As entrepreneurs, we have to do that. We have to think about it. When we see a customer, we want to take every advantage we can to move them from kicking the tires to shopping, to inquiring, to buying. That's what we're doing. To do that, people have to trust you. No trust, no business. I had a customer call me this morning, gave me a $4,100 order for a piece of equipment, and he is in East Michigan. Now, he talked with me for 29 minutes. You talking about that 9 times, he blew it out the window. This would be like he wanted 100 questions answered. And he was going to keep talking and either not give me the business or to trust. So you need to be ready for that. You need to be ready to be challenged. You need to be ready to stand up with your character and let it show through. And there's a time that you say, it's time for us to stop talking, and are you ready to buy? That's perfectly okay. You do it with poise, and you do it with character, but you don't want people just to abuse your time, because some people will wear you out. And that customer got to that point at a point in time, and I said, Billy, are you ready to pull the trigger, or do you want to call me back tomorrow and talk another hour about it? Now, I was willing to talk to him, but I wanted to motivate him to let's make that deal now. And he said, yeah, I've already written my check. I've just been talking. I said, well, let's move on, because I got 4 other customers on hold here. So that's the way we work it out. But we got to a trust point. He asked me a lot of questions and did that, and one of the answers I gave him was, I understand that you've never seen us. I understand you're worried about losing $4,000 to someone on the internet that you've never seen. I said, go to our website and read those 4 pages of testimonials, and maybe you'll find enough self-confidence that you feel good about doing business with us. So I use those testimonials today. 5 assumptions that I will guarantee you that will guarantee failure, and I have seen these this year. In the last 6 months, every one of them apply. Number 1, is it okay for you to take sales calls while you're trying to make a sale with a customer? Is it okay for you to stop a conversation with a customer for you to take a sales call? How many times has someone said, oh, I got to take this? Like the world was going to end if they didn't stop talking to you and talk with probably what was a junk phone call. No, it's not okay. I suggest you leave your cell phone in the car, in the pickup truck when you're going to talk with a customer about business. Relationship building has no room for you and I to put a customer on hold while we chase a cell phone call because it feels good. Lots of things are important, but very few things can't wait a minute or two. So put that cell phone aside and pay attention to your customers, look them in the eye, and make them feel important. Nothing makes them feel less important than you saying, oh, I got to take this. Now, the other side of the coin is your customers are going to do it to you. I'll just tell you that right now. Not because they're mean, not because they're discouraged. They just hadn't thought about it and they hadn't sit through this seminar. But that doesn't give you the right to do it. You're here to make money. You're here to be as good at what you can do. Don't let the cell phone interrupt the deal. My cologne, my hairspray, my dog, my cigarette smoke, my cigar smoke, my spitting in a cup, whatever it is, whatever odor I'm bringing into a room, maybe worked 50 years ago, but it don't work now. People have allergies. People are used to clean air filters. Folks that you're trying to sell to, you may be making sick or nauseated or very uncomfortable because of your perfume or your cologne. And really, the smell, the cigarette smoke on your clothes or on your breath. Now, I'll take a chance here, and I may be stepping on your toe, and if I am, just get used to it. Cigarettes stink. People who have allergies or used to be smokers cannot stand to be in that odor, and it makes them sick. If you're a smoker, try number one to quit. And number two, make sure that you're not wearing smelly clothes into a tight office or close quarters with the potential customers. It may indeed be the difference in whether you get the business or not. Remember, we're about relationship building, and in the back of the customer's mind is, do I want them coming around often? Do I feel comfortable sitting down in close quarters and sharing tight conversations with them? And if you got the cigarette smoke on you and they don't like it, the answer is going to be no. They're not going to tell you this. They're just going to give your money to somebody else. So smokers, wake up. Save yourself a few days of life. Save your family a whole lot of problems down the road, and do more sales by quit smoking. And if you can't quit, get some of this poof spray that really works and to get the odor away, and indeed it may help your sales right now. I say this after having been a chain smoker for 20 years. From 20 years old to 40 years old, you couldn't smoke any more than I did, or chew more tobacco, or smoke more cigars. But I was able to quit, thank the Lord, and it's made a difference ever since. Now, this is the right season for me to mention. Your political views may be held by 99% of everybody you know. But I'll guarantee you that person you're trying to make a sale to may be that 1% that is 100% against the folks that you're for. And you won't know it, especially in this region. But you want to be smart enough not to let your mouth get ahead of your brain talking about this candidate or that candidate and how people that are for the other candidate are crazy as hell or this and that and other things. Be smarter than that. And have an open mind that you're not the smartest person in the world and your candidate is not. Because 48% of the people in America today are 100% for the other side. It's amazing. Good business people who don't want to play and run their whole life on one party doing business with you will be smarter than that. I'll give you some good news in this. The day after the election day will be a great day for business, because at least on that day, 51% of the people are going to be happy, and I'm going to be happy with them no matter which way I voted, because I'm a businessman first, and I'm a party man last, but I'm going to be a good American and be all about a peaceful transition so that we can all get back to doing business. And anyone that don't think that way, I would say is an enemy of the business community. So don't you be part of that number. Don't let your political views cost you money, because these kind of relationships with people that really consider it so important that the other side is my enemy, if they have you plugged on the enemy side, when November's over, you're still going to be over there, and they are less likely to give you a call. Okay? Keep that in consideration. Is it okay for you to walk into an office when you know someone else is on the phone, and when you walk in there, you don't hear their end of the conversation? Even if they wave you on in, it is not okay. Don't interject yourself into someone's environment where you hear their side of the conversation. You got no business in there. You're sticking your nose into a place that don't belong. Even if you're waving them on, you say, no, I'll wait. Give me a minute. And they indeed, when they have a chance to think about that, will say, man, that was the right thing to do. It would have been okay for him to come in here and sit down. But you know, I might have gotten into something in that conversation I didn't plan on it, and I wouldn't be able to say what was on my mind. And he would have been uncomfortable, and I would have been too. You're better off not to put yourself and your customer in that position. Give them the space, and when the conversation's over, then get on with business. You may send a proposition out to someone and hope that you get the order. You may have worked through a quotation or a proposal with someone and hope you get the order. Or maybe you've done business with them so long you know you're going to get the order, because they would never give this business to someone else. Well, after 60-some years in business, I can assure you that is not the case. In today's world of competition, the internet, cell phones, Facebook, everyone has the opportunity to give their business to a lot of people. And maybe someone's been loyal to you for a certain period of time, but it's kind of like a light bulb. You ever thought about a light bulb? You put it in 10 years ago and you still flip that switch and it comes right on, as good as the first day. But tonight you walk in, you flip that switch and there's no light. The light bulb blew. That's what happens to business relationships. One person may have come along and blew your light bulb with frequently asked questions, with attitude, with no smoke on their clothes, with a great big smile, or maybe flashing eyes, with flirting, or whatever it is, we don't know. But there's always a chance someone's going to take you out of the game. And you don't know when that's going to happen. So to leave a proposal on the table and not follow up with your potential customer right away is a big mistake. So I would share with you that it's perfectly okay, Tamara, it's perfectly okay, Sarita, to call that customer up and say after a day or so, you know, I was really hoping to hear from you before Friday, because nothing would make my weekend like getting an order from you. That is good business. It's showing them that you're hungry. It's showing them that you want their business and it's not going too far. And if you're uncomfortable with that, get over it. You'll sense the customer reaction when you talk to them and how to handle it down the road. But do not assume that you're going to get the order just because you made the proposal. Follow up. Be hungry. Send the message of how much you would appreciate their business. And putting a tag on it, putting a hook on it. Man, if I could get your order today, my grandchildren would appreciate it so much, and I could buy them some shoes this weekend. Put some humor in it. Make it fun, and customers will enjoy it. When I make those kind of phone calls, sometimes I have to leave a message. And when I get that phone call back that afternoon or the next morning, it starts out with, Steve, I know you're poor and you're hurting, but I just can't go to bed tonight not thinking that you can't buy those grandchildren a pair of shoes, and I'm going to go ahead and give you this order. Hey, drama helps. Fun drama helps more. So don't assume your order's in the bag. Follow up on it and close the deal. Urgency. If a customer's giving you a chance to do business, you be on top of it. Don't put it off. Answer those emails. Do what you need to do. Now, we're going to go over just a few minutes here, and I hope you can stay with me, because we're going to get into the guerrilla action of selling. And I want you to know that the biggest thing that's helped me through the years is the knowledge, and I want you to have it, that some people just cannot say no. And you will need to learn that every time you get a chance to make a sale, put some drama in it and make a promotion out of it. It's really important that you do that. Remember not to give too much information away, because with the internet especially, folks will find out other people and they'll try to take the business away from you or go direct and do business with people. Some people have a hard time saying no. They got the money, they want the product, but when it's time to buy, they say, I think maybe I'd rather have the money than the product. And some people, it hurts them so bad, they're like this little girl. I mean, they fight it tooth and nail about doing that. How do you get around that? And this is my point now. Several situations. Make your presentation a work of art. We had an example of that this week with Dr. Tamara Thomas. Worked really hard on putting together some proposals, and I could see it in the work that she had done. And the proposals were a work of art. They were detailed, looked good, made sense, and I got a feeling they're going to be successful. I certainly hope they will. And if they're not, Tamara, we're going to ask those people, why not? What could you have done different? So that's following up on them. Don't just go in unprepared with a scratch pad. And I'm reminded of the fellow, Dr. F.A. Meisner. Do you know him? Dr. Meisner. He was around a long time ago, and he came up with the theory about mesmerizing, and the word is named after him. And what does mesmerize mean to you? Well, it's enthralling, it's being entranced or bedazzled, bewitched, hypnotized. I remember my grandson Colin used to sit in front of his TV when he was a baby, and if SpongeBob SquarePants was on, he was focused on it. No matter what else was happening in the whole world, no matter what other sounds were going on, he was focused on that TV screen. SpongeBob SquarePants mesmerized my grandchildren. Pretty much amazing. And what does that have to do with what we're talking about? Mesmerizing is saying to your audience that you want to capture them as if it's a drama on the stage. You want their attention. You want their 100% undivided attention. And until you get it, you're going to have a hard time closing this sale, especially if it's a customer that don't want to say yes. So that's what this is about. Maybe you've had grandchildren or children through the years, and they get colic at night and couldn't go to sleep, and we'd rock them till the wee hours, maybe even put them into Buick and drive around the block because they go to sleep in the car and nowhere else. We do all that we could to get that baby to quit crying at the top of his voice, screaming, and close their eyes and go to sleep so we could get some rest. Well, at some point in time, through all those screams and all that noise, they look up at you and go, that's the aha moment. Been talked about for years by a lot of people. And in selling, the aha moment is a very important time, because that's when you can finally convince the buyer that they like you, that they're accepting your advice as the truth, and that they know you enough to trust what you're saying. That aha moment has got to come, or you're not going to get the order. So we have to convince them that we got good price value, that the reputation of this product and the warranty of it is good. So you covered all those bases if you talk to the customer. And what you're after is getting them to relax those anxieties. That's what's got them on edge, is all those anxieties. Long enough to breathe easy. Long enough to breathe easy. Because when they're breathing easy, indeed, they're ready to buy. How do you get them there? You do several things. First of all, as we talked about last week, you are always looking for that aha moment so you can capture them and you recognize it. You do it by lowering your voice. You do it by using hand motions, like I'm moving my hands up and down as I'm making my presentation. You do it by shaking your head and such as that. And then as you lower your voice and look them in the eye and pause, when you pause, they start paying attention to every word you say. you pause for a minute, and then you go back to your head movement and your gestures and such as that. And instead of saying, do you want to buy it? Which they're not going to say yes. Instead of saying that, all you got to do is sign right here. All you got to do is initial this number here. Or all you got to do is shake hands. And when you started that presentation and you working on your emotions and such as that in those quiet moments, you will notice their eyes and their head going up and down in a yes motion just like yours does. They start agreeing with you. And when they start agreeing with you, when you offer that handshake, they are very apt to reach out, grab your hand, and shake your hand and never say, yes, I'll take it. The handshake was good enough. The initial beside the line was good enough. And you're making the sale there without them ever having to say, yes, I'll take it. That's really important. And is that applicable in a lot of situations? It is amazing. It is amazing because you'll change your whole technique into presenting and setting up that aha moment so that you can close the deal. And as you practice it and get good at it, year after year, you'll be amazing at how you buy. So congratulations, my friends. 6 weeks in class together, and so far we've made it work. I look forward to many, many more classes and courses in the future. You're always welcome to come back. I want you to have a wallpaper your wall with our certificates, because every time you come to a meeting and you add one more little thing, one more tool for your tool belt, makes you more apt to have a sustainable business. Stay in this race long enough to win it. God bless you and your family. I hope you have a great week. I hope to see you Thursday night and many nights in the future. So thank you so much for being with us. I'd appreciate your comments afterwards. You can turn your microphones on, and we'll talk for a few minutes if you'd like, and I'll try to answer any questions you have now, or in the chat. I'll print those out and answer them tomorrow. Thank you so much.
Steve, I do have a question. At the beginning of the lesson, I saw a slide that said, let me see here, I took a picture of it. It said, next week, Thursday, congratulations graduates. Are you hosting a final class for us, or is this the final class for this academy?
This is the final class for this 6-part course.
Okay.
However, I have run this course in conjunction with the 7-part course down at Sampson. So I consider it all one class, one fall class. So you're not required to attend any more lessons. I'll let everybody know, the results of the awards. But I do encourage you, if you can, to join us on Thursday night as well.
Okay, and that will be sent to our emails, correct?
Oh yeah, I'll lay it all out with a number of emails for you.
Okay, thank you.
Thank you, Sarah. Appreciate your hard work. Okay, anyone else? All right. Well, thank you. Hang in there. Look forward to seeing you as many times as you can, and I'll let you know how the awards are working out. Now, listen, I need to see those videos for Academy membership and Extra Mile awards. So work on those and your other homework assignments, send them in if you can. Your quiz will be important for extra consideration, and I'll need your home addresses for Sarita and I to be able to mail those those certificates to you in a couple of weeks. Thank you so much, and good night, and God bless you and your family.
Good night, Steve.
Good night, Sarita. Thank you.
Uh-huh.